Welcome to today's talk about mortgage financing during COVID-19. My name is Regina DeMeo, and I'm a family law attorney in Maryland and DC. I've been practicing for over 20 years, and I've had the pleasure of working extensively with Craig Strent, who's with us today, and he's the owner of Apex Home Loans. Craig, thanks for being here today.
Great to be here with you, Regina. Thank you.
Yeah, so we've all been hearing a lot about, interest rates being at an all-time low, but I'm wondering whether, people are on the fence and thinking, well, maybe I should wait until this COVID-19 thing blows over and then I'll look into it. What do you think?
Well, one of the silver linings in the COVID-19 thing is that interest rates are low. A lot of people are watching, unfortunately, their portfolios go down in the stock market and other places. And those people that are talking to their financial advisors, one of the things the advisor is telling them is, yeah, you're losing some money over here, but you can save some money on the other side. And that is because interest rates are low. And there's $11 trillion in mortgages on the books in this country. And more than half of that right now can benefit from refinancing. So there's quite an opportunity out there for people to take a look at their mortgage and see what they can save. And it doesn't have to just be, saving some money for lowering your payment, which a lot of people just want to have additional cash flow right now, and that's good. But for folks that don't need that, they can shorten the term of their mortgage for sure. And they take advantage of even lower rates. They can pull out some cash and do some home improvements. And I could tell you that a lot of people who are stuck at home right now are thinking about ways to improve their home and making some changes. So the cheapest source of financing to improve your home certainly is borrowing against it.
I see. So the main incentive is not always just to lower the payment. It could be that you want extra cash, or there's other reasons, like maybe mortgage insurance.
Yeah. So one, lower the payment, lower the rate, shorten the term, pull some cash out for other things, get rid of your mortgage insurance, maybe move out of your ARM and into a fixed rate. So there's a lot of different reasons. Certainly, people pull out money sometimes to pay for college or to increase their planning for retirement. So there's a lot of different reasons why someone might consider refinancing.
So do you go into that analysis with them and help them run the numbers? Is that part of what you do?
Absolutely. So if someone comes to us, what we do is we ask for a number of pieces of critical information, including their mortgage statement, and then we build out a detailed analysis that breaks down rate, loan structure, payment savings, and closing cost to the dollar. Record a video explanation for each customer to show them exactly what they'll be looking at, and then we give them a interactive spreadsheet that they can play around with and see all the detail of the potential refinance.
So right now you're not meeting with people in person, you're just doing it all remotely.
We are. Our company is doing everything remotely. We're actually discovering quite a number of efficiencies in working completely remotely as well. But in terms of customer contact, yes, it's all by phone and by video like this.
Okay. But what about the actual closing? They would have to go to a settlement company for that.
Yeah, so there's a lot of issues that have gone on there, and they vary by state. What we're finding with Maryland is certainly people do have to sign some stuff. A lot of times we've got literally people signing stuff in their car while the notary looks in through the window, and people doing it in their home while the notary watches, and then putting it back in the medically sealed pack. So we're taking a lot of precautions. Most loans don't require internal appraisals right now. Fannie Mae and Freddie Mac have made some adjustments in terms of what's required. So it's not that common that you would have to have somebody come in your home at all right now to do the appraisal. So there are a number of accommodations that have been made to allow mortgage transactions to continue during this time.
Wow, that's good to know. So in terms of the documents people send you, I guess, what would normally be required?
It's generally basic stuff. And in fact, the documentation process, which most people dread on a mortgage, has gotten pretty streamlined in recent years for certain types of borrowers. So, if you are W-2'd and you bank with one of the major banks, it's a fairly simple process. You can use some automation to provide your asset information without actually sending us any documents. We can also use something from called Day One Certainty, where we essentially can automatically obtain information related to people's employment. So while this doesn't really help self-employed people, for people that are W-2'd and are banking with major institutions, there's significantly less paperwork than they used to be.
Wow. Okay. So for people that are trying to buy in this market, do you have any tips for them?
It's really interesting because think about people that are selling their homes right now, right? If you have to sell your home in this environment where people have to sort of come through and look at it and all that, you probably really want to sell it. So while inventory has decreased significantly because most sellers have taken their homes off the market during this time, they don't want all those days on the market to be on the listings, and they don't want people coming through their homes. Those people that have chosen not to remove their homes really want to sell. So if you are a buyer right now, one, you probably have less competition than you did before because there's, so a lot of buyers have taken themselves out of the market, don't want to go look at houses. And two, you've got sellers that might be more reasonable than they were a couple of months ago. It's still a hot market. There's still limited inventory. It's still more of a seller's market, but buyers have a little bit more of an advantage than they did a couple of months ago in the current environment.
Huh. So you and I have, worked on several cases where I have clients getting divorced, and they're on the fence about whether to buy out the spouse or put the house on the market. What would you say to people who are contemplating a divorce and then are doing that cost benefit analysis of buying the other out versus selling?
Yeah, I mean, that's often a lifestyle question more than anything else, Regina, whether or not they want to stay in the house and keep it or not. In terms of the financial analysis of that, there's so many other factors that go into that. What other money are they getting out of the marriage? Most people don't want to be house poor. A lot of times I find that one spouse gets the house and then they don't have the cash to maintain it or anything else. And the other spouse gets the retirement plan and goes and buys another place. So you want to be very mindful of it and make sure it's a financial analysis and not an emotional decision, which is often what does happen. People feel like they have to grasp onto the house and get it, or else they sort of didn't win in the breakup. So I would look at both of those things. In terms of staying in the house, it's certainly cheaper to refinance and stay in the house versus take a new mortgage and pay all the closing costs of buying a home. But what has to be factored into that are what are the ongoing costs of that mortgage if you stay in the house. Transactionally, it's cheaper to refinance. Long term, that depends on what they would buy later and what kind of maintenance costs they have to stay in the current home.
And I know thankfully you have not been through a divorce. I'm happy that you and Amy have been together for so long. But do you find that having done the training as a mediator and the collaborative divorce helps you when you're dealing with clients that are going through the divorce process?
Absolutely, and certainly handling so many of those transactions over the last 20 plus years. I'm very familiar with the issues that come up with regard to divorce. Certainly, I'm very familiar with the emotional issues that come up as well, and my team is equipped to deal with those. In fact, my loan partner, who often works with a lot of our divorce clients, is divorced herself and now remarried. So she's very fluent in what the different stages are and what the issues are that come up. But yeah, I mean, we've been doing divorce cases for many years, so we know what the issues are, and we know how to handle logistics of buying one person out when the other person remains. We know how to use alimony and child support income, how to properly document it, and what all the rules are around that.
That's great. So Craig, if people wanted to contact you for further information, I'm going to try and share a screen. Can you just tell them what's the best way to reach you?
Email, usually the best way to reach me. C Strent, as you can see there. First initial, last name at apexhomeloans.com, and that's my phone number if you want to give me a call.
Great. Well, thank you guys for tuning in, and hopefully you're all staying safe and have a great weekend. Thank you so much. Thanks, Craig.
Thank you.